I like secondary and tertiary markets right now. And that's where I'm looking.
Yeah, for sure.
That's where honestly, that's where it seems the deals are. If we're going to land one, that's where it seems the deals are.
Yeah. I don't know if you're seeing anything out there. I know you've got some commercial stuff. You've got a bunch of residential. What are you seeing on your end there?
Yeah, nobody's selling. Nobody's selling. Everybody's keeping their stuff. There's, especially in the States too. I'm not too focused on the Canadian market anymore. Like I said, if something comes across my desk, it's a deal. I'll buy it. But in terms of the U.S. market, commercial real estate, multifamily, I'm not seeing anything hit the market that it's like the seller's expectations haven't met the buyers yet. And will they? I don't know. I'm not really sure. Will my expectations have to change as a buyer? I guess time will tell. It's hard to. It's a weird market right now. It really is. It's a very weird market.
Yeah, this is the adjustment period.
Yeah, exactly.
Now, they raise rates how many times in a row?
Yeah.
Not even the amount of times, but the percentage from where we were in terms of rates to where we are now. It's going to take a long time for the market to adjust. It could be another year or two.
Yeah.
Prices, either the seller's prices have to come down or rents have to go up where now the investor can make money.
Yeah.
Eventually, it's going to balance out. It has to.
Yeah. The only thing that I'm I'm in this odd kind of catch-22, I guess you could call it, where I want to buy. And the reason why I want to buy is because I would actually rather buy when rates are high versus when rates are low, because when rates are low, you can't ever change the basis of buying a property.
True. This is very important.
Yeah, this is very important.
Very important
you can never change the basis of the purchase price that you bought for. Okay, but what you can change is the mortgage, right? And mortgages are cyclical. So say for example, you buy something right now, you lock in for 2-3 years, and in 2-3 years, which is the majority of what everybody out in the market seems to think, economists, brokers, all of the lenders that I speak with on a daily basis, that this won't last. Obviously, they even refer to this as the higher rate environment right now. It's not going to last. It's going to be cyclical, which I don't actually think is too high. I think for everybody that I speak to feels like it's going to settle in between somewhere 4.5%-5%, which is decent.
Normal.
Yeah, which is still normal. I mean, I locked in the beginning of when rates were at their absolute lowest. I locked in 2 commercial properties at 3.8 and 3.9. So if commercial rates land somewhere around 5%, it's only like 1 and change over and above what I locked in at for 5 years at the lowest point rates have ever been. So it's really
like
not
emergency rates.
Yeah, it's not even that big of a deal. So for me, they're a little bit higher right now, but I would rather be in a situation where I lock in for a small period of time overall, a higher rate, say even 6%, right? For 3, even 5 years. But what happens is to make that deal work, you have to get into it at a certain basis, and that basis doesn't change. But in 5 years, the rate can change. So if you can change the rate, you effectively change the deal.
There's a few things that could change, not just the rate, because the rate is huge. If an investor can get a 1% lower rate than you got, it makes the whole deal look way better.
100%.
Number 2, cap rates. When rates drop, cap rates typically drop as well.
Yeah.
It's just common sense. So you can make money in that regard. And there's a third one, but now I forget. So they
all hinge on rates, right?
Yes, you're right. Yeah. You're right. They do, but there's like multiple ways that you can win there.
Yeah.
So and also when rates are high, most investors are sitting on the sidelines, and like you always say, the opportunity cost of not doing a deal when the market's slow can be massive, because we were looking when the market was insane.
Yeah.
Try to buy a prime property.
Oh, it's tough.
That's making money in any of these hot cities. They were to the point, right? Like the hottest cities that we would look at, Austin, what else? Like
Miami, And not that I would have my finger on the pulse in those big cities, but I would go out into secondary and tertiary market, maybe not even tertiary, maybe like secondary markets. Like for example, when we bought that North Miami property, I knew North Miami was hot, but we went to all right, sorry, when we knew that Miami was hot, we went to North Miami, secondary market, because Miami was so hot, we ended up going to a secondary market. So it's I like secondary and tertiary markets right now, and that's where I'm looking.
Yeah, for sure.
That's where honestly, that's where it seems the deals are. If we're going to land one, that's where it seems the deals are.
Yeah, it's kind of simple, right? Those primary markets are so popular for the wealthiest people in the world that they don't really care about the prices. They don't really care about the rates. All the wealthiest people are going to those spaces, pushing out the regular people, let's call it, to the secondary and tertiary markets.
Yeah.
Whatever, we'll invest anywhere that makes money, but I don't like to be too far from like the primary markets where you're just in some Midwest state where there's literally never any catalyst. There's nothing that's ever going to drive this small little town to any prominence. We typically like to be in those sweet spots, right? It's not really that complicated. So those were even super hard to find deals that made money because the market was so hot. Investors were just scooping up anything. You're competing against hedge funds, pension funds, people with way more money than us.
Yeah.
So now what everybody says is you buy when there's blood in the streets, buy when nobody else wants to buy, zig when the market's zagging. Like, this is the time to be advantageous. The problem is finding things that make sense with the higher rates because the market hasn't adjusted yet.
Yeah, exactly.
But it's in the process of adjusting.
It is. And, I've told a couple people this, and they somewhat agree, somewhat disagree as well, is that, I'd almost rather buy something. Say for example, you buy something, you get into a basis where you're paying a little bit more than what the bottom is. So say for example, we haven't seen the bottom yet, and the bottom's going to be coming in, say, a year from now or whatever. Because I truly don't see too much out there that would indicate the bottom is coming even in 2023.
I agree.
I see a lot of people that predicted the bottom was going to hit in 2023. I saw a lot of people that predicted the bottom was going to hit in 2022. So maybe it's going to hit in 2024. The problem is as soon as you realize that the bottom's hit, it's already too late because you're probably behind the curve, okay? And I've seen this before. This happens all the time. And at that point, it's probably, like I mentioned, it's too late. You're behind the curve, and then now everybody else is in the market because it's on an upswing. So there's something to be said for being able to get quality assets when no one else is looking, even if it means you have to overpay a little bit according to what the predicted bottom would be. I'm not saying you should overpay right now. What I'm saying is because it's anybody's best guess that maybe we have hit bottom right now. Maybe we haven't. Who knows? It's hard to say. But the chance of not buying something, even if you have to overpay over and above what that potential bottom is too great, in my opinion, for not taking down a quality asset.
Yeah. You hit the nail on the head because when the bottom's here, it's already, you're going off of lagging data. All data is lagging.
Yeah.
It's backward looking.
Yeah.
All of it. And there's even a lag on the lagging data.
Mm-hmm.
Like the government's getting data from 3 months ago, and they're posting it as if it's today's stats. And it's already too late. So you're right. When that bottom comes in, you're already too late.
Yeah.
100% because the data is too far behind.
Yeah.
So love what you said. That's why we're always in the game. You never force anything, right?
Yeah.
The numbers have to make sense, but we are not sitting around waiting for the mythical bottom that never comes.
No.